What's up, guys? Welcome to the Factory Financial. My name is JD Novels, and this channel we talk about real estate investment and stock market investments. So today I want to talk to you about a video that I made a year ago about RioCan, and I just want to play a little short clip from the year ago video or 13 months ago video, and this is what I said 13 months about this company. Okay, so we covered very key important things to me that I see the reasons why I should be bullish or why I am bullish for RioCan, and that's long-term demand, long-term low interest rates, which will help RioCan in the long run to fund those projects and make them cheaper, which is going to bring more revenue to the company. However, if we look for short-term, there might be some pain, there might be some volatility because some of those their tenants like Good Life or EB Games, I don't know how long they're going to be in the business, especially EB Games. Some of them might go out of the business, and when you add those up, it comes almost to the 20% of the occupancy for those, in my opinion, questionable. So I don't know, they might get a loan from a government, they might rebound, RioCan might do something, I don't know. But in the short term, this might be painful, and we might see stock drop down a little bit further. In the long term, like I said, I'm 100% bullish, and as you can tell right here, as you can see, this is my real estate portfolio. It's $1,400, almost $1,415, and the real estate is bulk. Like majority of my investment is real estate. Number one is Plaza REIT, and number two is RioCan. And I'm planning in a little further while, like as much as I can, as long as RioCan is down, just to heavily invest into the RioCan and Smart Center real estate. I believe in this company, and in the long term, I think even if it goes back to what it was previously before Rona hit the street, so what was like $26, $27 per share, and so you get some of the growth over there. Now it's $18, so you're looking almost like $10 per share in a... Okay, so I was wrong. It's not $10, so it's $8 return. Let me show you. Unfortunately, I had to sell out of that portfolio. I sold every single share because I bought a house and I invested into that. The great opportunity came by, so I had to do it. And my return on that is just incredible. That's a video for another day. Let me show you. That day when I made this video, my father was like, "Oh, what are you doing?" So I explained how it works, what it is, TFSA, and I bought one share of RioCan. So let me show you exactly. Look at here. February 8, 2021, one share, $17.58. Okay, so $17.58. So if you look at here right now, it's $25.66, and I was actually wrong because by the April, look at that, 2 months later from that, when I made that video, 2 months later it was $20. So I was wrong. There was no short-term pains. Look at that, 25%. Look at this, $8.08 growth, 45.96, almost 46% return on a REIT. Let me say that again, 46% return on a REIT. That is insane. That is incredible. I can't believe it. This is, if you bought it 13 months ago, if you bought RioCan during the crash, congratulations. You did awesome. That is incredible. That is incredible in 13 months. So I was right. Let's look at it. Okay, let's look at some comparisons, okay? Okay, so let's go jump into the Refinitiv again. So as you can see, they still have it's almost strong buy, which I would disagree, and I'll tell you in a bit why. So it's actually 25.20, so it's a little bit, yeah. So this is not 100% updated, so okay, that doesn't matter anyways. So let's look at some comparables, okay? So if we look, REIT is right here, so 1 year return 30%, and rest of them don't look bad. But look at this. This is Summit Industrial. So if you remember when the Rona happened, the first wave when it happened, everybody jumped like off the ship. Like everybody abandoned the ship for real estate, for REITs. Everybody was concerned if the tenants will be able to pay those rents. and especially for like offices, industrials, and plaza REITs. So I still have some plaza and I still love it, and it's been lately on a run, on a tear. So plaza was destroyed, but look, 30% return right here. Summit, where's the Summit? Summit, 58%. Summit got crushed, and look at that, 58% return in 1 year. That's insanity. That is insanity. So the Refinitiv has it as average score of 7. Well, I don't know about that, but let's look at this, okay? So TMX Money, looking at the key data. Okay, so we got earnings per share at $1.89 and price to earning ratio at 13.6. Allied Properties 3.4, almost $3.5. PE ratio 13.50, also a little bit high. Look at the Smart Center, $4.86 per share earning, and they have PE ratio of 6. So they have a lower, much lower PE ratio. Plaza Retail, 98 cents per share and PE ratio of 5.2. And let's just do the Juggernaut. Look at this, 4.1% in 1 day. That was on Friday. Good for you guys. Good for you guys. I love it. Look at this Juggernaut. Look at this. Earning per share, $19.86. But PE ratio is still 4.8. 4.8. Which tells me about RioCan that they're on a small tear right here as real estate it is right now because what's happening in Ukraine. So that's not good, but it's good for real estate, right? So look at that. 0.5% or 1.8%, 50 cents. That's awesome. Good for them. Good for them. Anyways, let me show you this. So my prediction for RioCan, let's talk about that. What's happening in Ukraine is a big problem because people are abandoning high growth right now, not only because of Ukraine, but because interest rates hike. We already saw 125 basis points interest rate hike in Canada. My thinking before this craziness in Ukraine happened was that Bank of Canada will go back to the benchmark 1.75. So increasing by 25 basis points to 1.75. That's what they held for a long time. That would pretty much deal with inflation maybe in a year or so, but that was definitely slow down inflation and got rid of it in time. Right now, with what's going on with Russia, and that impacts the energy sector, right now we are seeing, one day it was like $2 for a gas here. Right now it's $1.65, $1.70. It's still, that's gonna affect your inflation, right? Because everything's gonna be more money. Food's gonna be more money. Your energy is gonna be more money. Heating, cooling, everything's gonna be more money, which will increase the inflation. So on one side, you have people jumping ships from growth to bonds and real estate and energy, right? Even Warren Buffett just bought like $5 billion or something crazy of Occidental. Yeah. So whenever people start buying bonds, the bond yield goes down. When bond yield goes down, your 5-year fixed rates go down too with them. Will they be increasing rates? I hope so. Bank of Canada, so I hope they go back to 1.75 and that's where they stop, which is not good for RioCan or any real estate when you have interest rates raising up, because we higher interest rates, that reflects on the prices and prices go down. Real estate in Ontario has been super crazy last year and a half, 2 years, just insane. Like if you had any real estate, good for you, just made crap load of equity. And that brings me to my dilemma. Let's call it a dilemma, right? So what to do with the RioCan? And I think the best step right now would be to sit back, relax, enjoy your gains. Because I think that real estate is going to be on a tear, like those REITs are going to be on a tear for a little while. How long? I don't know. Should you be putting money more? I never like chasing bull markets. I like to buy opposite. Right now, nobody's loving Microsoft, nobody's loving Apple, nobody's loving those high multiple companies right now, which if you bought real estate in 2020, right now you're laughing. So we're gonna wait a little bit, and if you start buying it, like I started buying Amazon a little bit, chunks, as much as I can afford. So maybe those high multiples gonna be hating on, people will be hating those for a while. So just get into those. So 2-3 years down the road, you're gonna be laughing because you'll be like, I got a great deal. Like I'm looking right now at that $17.56 per share, and I'm like, I wish I bought 10,000 shares. Like, you know what I mean? So I think there's opportunity in other markets, because right now you have a rush, like market is rushing into the bonds, they're rushing into real estate and energy. That's great. On the other side, you have very high inflation, so the Bank of Canada has to intervene, and they have to raise the rate, overnight rate, lending rate. So before this war happened, I thought like if they go back incrementally to 1.75, what was their standard benchmark, whatever, before the Rona happened, that would be perfectly fine with me, because there's so much debt they pumped out, liquidity they pumped into the system in the last 2 years. It's just nobody can afford higher rates. So if they go back to the 1.75, they can be like, you see, we're back at pre-Rona levels, we're back, everything's good, blah blah blah. They can play the Hawks, they can play like, oh, we saved the day, whatever. Immigration is going to be still high for Canada, because especially from Ukraine, and they're even raising more projections to 50,000. I don't even know what the heck it is anymore. So we're gonna have a high demand. You got 2-3 things competing right now, so it's very hard to make a decision. So like I said, just sit back and relax and enjoy your earnings, right? So you deserve that. And if you want to do me a favor and smash that like button, subscribe, and I'll see you in the next video. Bye.